Today marks exactly 1 year since the stock market dropped 12% and the Dow plummeted nearly 3,000 points in a single day. We look at how stocks have charged higher since then and how airlines in particular are beginning to hit their post-pandemic stride. And finally, Sweden and Latvia become two of the latest countries in the European Union to stop administering the AstraZeneca vaccine. I'm Pippa Stevens, and this is CNBC After Hours. Stocks finished mixed today, a full 365 days after the coronavirus pandemic wreaked havoc on the market. On March 16, 2020, the Dow fell 12%, cratering nearly 3,000 points. Stocks continued to fall for another week, but March 16th marked the biggest point drop on the Dow in its history. 12 months later, the index has roared back. Today, it's 63% higher, and even though the Dow only tracks 30 stocks, it's worth noting that every single S&P sector is remarkably higher than a year ago. And when we drill down even further, individual industries have emerged from the economic wreckage as well. Take the airlines. Air travel is jumping. The TSA screened more than 1.2 million passengers yesterday. That was the fifth day in a row with volume higher than 1 million people. And as goes travel demand, so go the stocks. Leslie Josephs explains.
Air travel is starting to come back. It's not back entirely. If we compare to pre-pandemic levels, we're still more than 40% below where we were in 2019. If we compare to 2020, when things were starting to get really bad after the WHO declared COVID-19 a pandemic, we are seeing some improvement. We're seeing vacationers come back, but we're nowhere near where we were before COVID-19 hit. So airline stocks were among the most battered last year. They were the most affected. We saw airline travel fall to the lowest level in decades. We're seeing a pretty meaningful increase in air travel, and that's mostly due to the fact that vaccines are rolling out. More people are getting vaccinated. The executives that we've spoken to said that spring break is coming in better than they expected. We're starting to see that recovery, so the stocks are kind of following that. That's one part of it. The other part that's driving stocks is that airlines just got their third round of federal aid. That's got $14 billion. That means since last year, they got $54 billion in taxpayer money to pay their workers. All the airline stocks have really rallied. I mean, this kind of reopening trade, this idea that hotels, airlines, anything that was kind of put to the side, like travel for the most part during COVID-19. People were remodeling their homes, trying to save money. And now that things are starting to open up a little bit, there are things to do when you get to your destination, Disneyland, et cetera. That's kind of spurring a little bit more travel. The budget airlines are pretty much running circles around those airlines. If you look at the stock price of Spirit Airlines, Allegiant Travel Co., which is the parent company of Allegiant, or another budget airline, those have more than tripled over the last 12 months, which is pretty significant. And the reason for that is the two areas of travel that were hurt the most, every area was hurt, but hurt the most, business travel and international travel. Budget airlines, on the other hand, cater to domestic travelers who are price sensitive and they're vacationers. And that's the most resilient part of travel throughout the COVID-19 pandemic, and that's the part that is coming back now.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
At some point in the next few weeks, probably 5 to 10 weeks, we're going to see the supply curve and the demand curve cross, where we're probably going to have more supply than we are going to have demand. And I think it's a good thing that the Biden administration has allocated a lot of the American Rescue Plan money to a major ad campaign to encourage people to get vaccinated.
We're looking for a rebalancing of the consumer budget away from all these goods that we saw decline in February to services. In February, we saw a burst of hiring from restaurants. Is that being matched by a burst of sales in services, especially when those $1,400 checks hit? Are we going to see them buy more stuff or have more experiences, travel more with a reopening of the economy?
We have designed this program where the money all goes initially to a national opioid abatement trust, and from that it's distributed to all the various creditor groups, but under a guaranteed commitment that the money will only be used for opioid abatement purposes.
I think people are shelling out so much money because we really created something unique when we work with Ferocious on this concept, and we're really trying to pioneer how people are thinking of buying sneakers and items in the future as collectibles first, and then you have the utility of wearing them.
We're clearly on the upswing, and as more and more people are getting vaccinated, particularly leisure demand is coming back at almost 100%. So that's coming back. International borders are still closed, so we have a ways to go on that. And my guess is business demand is still 6 to 9 months from really hitting its inflection point and coming back.
All right, even though air travel is bouncing back as vaccination rates grow, one company is investing in athleisure apparel, which was a major trend of the pandemic. Dick's Sporting Goods is launching a private label men's athleisure line, betting big on the permanence of casual loungewear and coming straight at Lululemon's market dominance. Lauren Thomas has those details.
So Dick's Sporting Goods is digging even deeper into its ambitions with private labels. And this week it announced the launch of a new line called Versed, which is a spin on the word versatile. It's VRST. And this is a men's athletic apparel line. It's loungewear, clothes that you could wear from the gym to running errands around, around the neighborhood or even just around the house. Dick's said it saw a white space in its stores and that it offered a lot of these more premium apparel lines like a Nike or an Under Armour, specifically for workouts, but it really didn't have something that was more for lounging and day-to-day wear. It's actually more similar to what you might see in a Lululemon store. I think many companies, when the pandemic hit and consumers immediately reverted to wearing sweatpants and leggings and just comfortable things, it was kind of a wake-up call for companies that weren't invested in that space before. Men's in particular is an interesting space, and it's still a blank space today, arguably, for a lot of these big name retailers, including Dick's Sporting Goods. I think Dick's is looking at Lululemon, which a few years back realized that it really needed to invest in men's and building out men's. When you think of Lulu, I think many people arguably today would immediately think, oh yeah, it's for women. They sell leggings and sports bras. Well, Lulu has actually really been growing in men's, and that's increasingly becoming a bigger part of its overall revenue each year. In 2019, Lululemon actually said it planned to double the size of its men's business within the next 5 years. So it's still on track to do so. And I think the company has said that the pandemic has actually accelerated that. Today, I think there are many startups and smaller direct-to-consumer players in that space, but there isn't really a big name. So with some of those smaller brands, I think of like a Roan or a Mack Weldon or 10,000. Again, these are like smaller, more niche brands in men's athletic apparel that kind of own some of that market share that Lululemon is looking to grab. And now Dick's Sporting Goods, of course, becomes another entrant in that space. But, as people do start to go back to the office this year, there's a lot of optimism about being able to attend social gatherings again, and concerts and parties and weddings. And so that apparel spend, it's going to be divided into other categories this year, whereas last year it was a lot of active wear. This year, I think consumers are expected to spend on dresses, suits, and refreshing their wardrobes as they look to get back to somewhat normal activities. So that's certainly one headwind that Dick's will have to consider with this new launch.
Okay, time for the numbers round. Today, we're wrapping up a lot of news on the global vaccination effort. So let's kick it off with 13. At least 13 countries in the European Union have suspended their rollouts of the AstraZeneca COVID-19 vaccine because of concerns about blood clots. Austria was the first to stop using AstraZeneca's vaccine last week following the death of a 49-year-old woman who received the shot. The World Health Organization and the European medicines agencies have downplayed safety concerns. The WHO is urging countries to continue their vaccination campaigns, and the European regulators say the benefits outweigh the risks. Canada, Australia, and the UK have also rallied in support of this specific vaccine. AstraZeneca itself said of the 17 million people who received its shot in the EU and UK, there have been 37 blood clot-related instances. We should note that AstraZeneca's shot isn't one of the current vaccines in our immunization effort here in the US. Next, 6. Moderna has begun testing its vaccine on young children aged 6 months to 11 years old. The mid to late stage study will assess both the safety and efficacy of its 2-dose COVID-19 vaccine on kids. The company plans to enroll more than 6,700 kids in the US and Canada. This trial comes a few months after Moderna began testing the vaccine in adolescents aged 12 to 18 years. The vaccine currently has FDA emergency approval for use in adults aged 18 years and older. And finally, 2.4 million. According to the most recent data available from the CDC, the United States is currently administering 2.4 million COVID-19 shots per day on average. That's nearly 1 million more daily doses than the 1.5 million goal that President Biden set shortly after he took office in January. This week, the CDC said that more than 71 million Americans have received at least one dose of the COVID-19 vaccine, and more than 38 million people are fully vaccinated. You can track the pace of the national and global vaccine efforts by going to CNBC.com and downloading the CNBC app. That's it for After Hours. We'll be back here in our home office every Tuesday and Thursday, so be sure to catch us then.